What is going on, guys and girls? I hope you are all doing well. Thank you all so much for tuning in to another week of what I like to call Mind Over Markets. These are your bi-weekly doses of a little bit of psychology, mostly focused on improving your performance in the markets. Now, for anyone that has tuned into one of these sessions before, you'll be very familiar with the structure and flow of what we do here. But essentially, each and every week, we are focusing in on one specific topic to help you improve your performance, your consistency, and most importantly, your return in the markets. That's what we're trying to get at through here, the overall aim and objective of what we're doing. Now, today, we're focusing on, I'd say, probably one of the topics that has the most questions around it. I think arguably this topic has the most amount of frustration, the most amount of blown accounts, and the most amount of inconsistent performance attached exactly to this. And what I'm referring to here is all about emotions. It's that thing that is a natural part of being a human being. But when it comes to trading, everyone seems to perceive emotions as being this wildly negative thing that we just need to turn off. And the objective of what I want to take you guys through today, I want to spend the next 30, 45, 60 minutes with you guys talking about the idea of specifically why emotions are not necessarily the problem and how you can learn to thrive in a probabilistic environment whilst actually maintaining some consistency in the markets. Most importantly, getting rid of this idea that you need to simply stop feeling any emotions whatsoever. That is not the goal. It's not the objective. I don't want any of you to become emotionless human beings, because that's not going to be how you make the most of the human experience, at least in my opinion, right? So I want to start by talking about the objective and actually the purpose of emotions, because 9 times out of 10, when I have a discussion with traders from any background, one of the things that I'm often getting asked is, how do I stop feeling anger? How do I stop feeling frustration? How do I improve my level of patience? And ultimately, everything is rooted around the idea that the emotion that I'm feeling is causing some kind of issue with my performance in the markets. And I like to flip the script with this a little bit. I like to remind most people that actually it's not the emotion that's the problem. It's often your ability to be aware of and then regulate that emotion, which is the wider issue for most people. Okay? So when we unpack this in the wider context, what I want you guys to understand is that emotions are not good or bad. Right? They are not good or bad. For every single one of us, there is a time and a place where emotions work completely fine. They are actually very, very useful to us, and we don't need to resist them in any way, shape, or form. And I want to give you a very brief example of this, probably something that we covered in some of our first few introductory sessions together, right? Now, if I put a trade on today and I started to feel anxious, you would probably understand that, or most of you would probably see that as a bad sign, right? The anxiety that I'm feeling is a bad thing. It could be linked to any one of 100 different problems, but we would see the anxiety as a bad thing because we'd be worried about our position, and we're more likely to act impulsively based on anything that's going to happen in the future, right? But let's take that same emotion and let's apply it in a little bit of a different context. And you see that once you start changing the context, you understand that it's not the emotion that's bad, it's the perception of the emotion and how it applies in that specific situation. So for example, if you were stranded on an island or in a jungle and you were completely alone, you didn't really know how to survive in the wild, and somewhere in the distance, you heard a rustling of the bushes. You heard something that made you feel a little bit on edge, and immediately you start to feel anxious. You start to feel worried. Now, in that instance, the emotion is not necessarily a bad thing. The emotion is there largely because it is helping you to do the one thing that your mind is aimed at doing, which is ultimately helping you to survive as a human being, right? It's helping to keep you alive on a day-to-day basis. Pretty much every decision that the mind is making is constantly trying to balance out the idea of needing to go through pain, needing to go through discomfort, trying to avoid any harm, and trying to avoid anything which is going to cause you a potential threat to your life, because that's how we've really evolved from, right? If you think back to our earliest days as human beings, we didn't have a lot of the modern day luxuries that we're blessed with now. Many people didn't have a roof over their head. They didn't have electricity. They didn't have a front door to keep intruders or animals or wildlife out. We are blessed with so many things that our ancestors ultimately didn't have. But you have to remember that the human mind was molded in an environment which is very, very different to what it is today. And so what I want you guys to start recognizing is that the human mind is largely equipped for survival. And therefore, the thoughts and the emotions that you have on a day-to-day and a week-by-week basis, they're not designed to be seen as good or bad things. They're actually designed to be seen as part of a moving cog that helps you to make decisions. And ultimately, those decisions are usually moving towards some kind of reward and moving away from some kind of either pain or potential perception of pain. And that's really, really important to keep on board, okay? So if you guys can understand that analogy, if you can all agree that what we're working with here is inherently not as black or white as this is good and this is bad, then what you have to understand is that you're dealing with something that is ultimately in a shade of gray. Now, if you will agree just for a second that it is not the emotion that's the problem, then you have to understand that the only thing that you can really focus on is ultimately this perspective and this outlook, that it's how you react to an emotion which becomes the problem. Because that's the reality of the world that we live in. If I was, for example, to open a trade and that trade didn't go my way and it was sitting in a period of, let's say, drawdown, right? It's against my entry. It's not really going in the intended direction, but it hasn't yet stopped me out. And in that moment, I'm feeling fear. I'm feeling frustration. I'm feeling anger. I'm feeling all these different types of things because the market is not doing what I expect it to do. Now, if I felt all of those things, but didn't act on any of those emotions and simply followed my plan all the way through from analysis, entry, management, and exit of my trade, what impact does the emotion actually have? Does it actually impact your account in any way, shape, or form? Does it cause any detriment to your performance if you have this ability to acknowledge an emotion, but simply learn and train yourself not to react to it? And the honest and truthful answer here is no, right? In the majority of instances, what we tend to find is that it's never the emotion that's the problem. It's our reaction to the emotion. And so this session is primarily aimed at opening your mind to this world or this perspective of dealing with your emotions. This is not about thinking that frustration is good and frustration is bad and happiness is good. This is about understanding that emotions are very much in a space where they cannot be categorized as black or white, because it is all a game of perspective as to how you perceive and take on board any specific emotion. Okay, so if emotions are not good or bad, then what is the best way to actually look at them when we experience them? And I emphasize the when, because it's inevitable that you're going to experience an emotion as part of your trading, whether it's impatience, whether it's fear, whether it's FOMO, whether it's anger, whether it's frustration. None of those things are inherently bad if you learn how to regulate them in the right way and not act on them at times which are ultimately going to cause a detriment to your account, right? So the thing that I want you to start opening your mind up to is this idea that emotions are not good or bad. They are simply a symptom of an underlying problem, which is likely to be rooted to a belief that you are holding. And that belief may have come from a variety of different places. For most people, they are formed during childhood. This is something that we talked about in our introductory sessions. And again, if you weren't part of those sessions, if this is something that you would want to catch up on, every recording is available for you guys to be able to do so. But most of our emotions did come from much earlier days, early experiences when we were children, when we were growing up, when we didn't really have the logical, rational, and adult mind that we do now to be able to comprehend that this may not necessarily be what it seems. And we simply just took everything on board. We took everything at face value and we accepted it as being true. Whether it was actually true or not is a completely different story, right? But I want you guys to start understanding that the emotion is not the problem. It's the symptom of the problem. And therefore, if you want to get better at reacting to the emotion, the best thing that you could possibly channel your time and your energy on is actually understanding what is going on beneath the surface. Okay? By spending a little bit of time understanding why you're experiencing the emotion, you're actually going to find that you can tweak your framework, your process, your perspective, your outlook, your actions, your habits, your routines. You can tweak all of those things to work in a way that actually don't cause any harm. And they allow you to fix the underlying problem. Because when you ask 9 out of 10 people, when it comes to how to deal with certain emotions, how do I accept a loss? How do I walk away when I've missed a trade? How do I recover and forgive myself when I've made a mistake? Most people will all say the same thing. They'll all be a combination of, just walk away, just take a break, breathe a little bit, come back, meditate, all of these things. And don't get me wrong, all of those things can be very, very helpful, but it has to be applied in the right context, right? It's very, very difficult to walk away when your emotions are simply boiling over and you haven't taken the right steps to actually understand what's going on beneath the surface, right? Trying to walk away from a problem, from a thought or an emotion that you're experiencing without actually addressing the underlying issue, in the long run doesn't really do you any good. The example that I give most people here is if you were driving down the road and a warning light popped up on your dashboard of your car and you pulled over, would the logical thing to do be to turn off the car, walk away for 10 minutes and come back, turn your car on and start driving again and hoping and praying that the light doesn't come back on? Presumably not. I would like to hope and pray that most people on today's call will understand that that's probably not a great way to look at dealing with emotions in some way, shape, or form, right? The most logical thing to do would be to pull over, to understand what that warning light is telling us. Where is the issue? Do I have a flat tire? Have I run out of oil? Maybe my coolant's low, right? There could be a variety of different issues attached to this, but you have to understand specifically what is going on. And then when you understand the root cause, you can jump out, you could turn the engine off, you can get out of your car, you could open the bonnet, and you can address the underlying problem, right? Of course, if it's engine related. Otherwise, maybe replace your tire, whatever the warning light is indicative of, okay? Once you fix the underlying problem, the rest of the drive becomes smooth. The rest of the drive is completely fine. And that's what I want you guys to start thinking about, and the mindset that I want you to bring with you when it comes to trading. Because the reality is, I've been in this game for long enough to understand that success is in part of this game is not a straight line. It's not linear. You will inevitably go through periods where you don't just take a losing trade, you take a series of them. You actually go into a period of drawdown because, at least from my experience, every strategy experiences that at some point in time. You go through a natural period of underperformance, and that is because every strategy works. It just doesn't work in every market condition. And that's what most people miss. It's what most people don't really understand. Now, if you're not mentally prepared for what happens during those challenging moments, during those losses, during those periods of drawdown, then this is going to be something that you always struggle to deal with because your mind is not really aligned with the current reality of what the world is giving you, right? Your expectations are very, very optimistic and they're not aligning with the harsh reality of what is currently happening for you. Now, when your expectations are not aligned with reality, it only opens up the door for one thing, and that's disappointment. That's the thing that tends to turn into this spiral of behavior, frustration, anger, overtrading, revenge trading. And it turns one small moment in time or error into something much, much larger, and it doesn't need to be. Your entire ability to succeed in this game is not predicated on the idea of how well can you pick a top or bottom? How many winning trades can you have in the next day or so? How much percent can you make by the end of this week? Everything in your ability to survive consistently in the long run is all rooted in the idea of how well can you manage risk. And if you never learn this ability to master your emotions, and when I say master, I'm not talking about turn off. I'm talking about regulating your emotions. If you never learn to develop that skill, this is going to be something that you always struggle with, and it's going to single-handedly be the reason that you fail to find consistency in the long run as a trader. And for everything that we are doing here as part of your journey with Darwinex, it is all about long-term sustainability, right? Everything that the platform does, everything in the way that the risk engine works is designed to make your performance in the market sustainable. It's to ensure that you're not taking too much risk that you will eventually blow up on. And it's to also ensure that you're not being too conservative so that the times where you do win are not actually meaningful enough, right? So everything is centered around this idea of becoming a very, very good risk manager. But if you choose to be the person that clicks the buttons, that hits buy and hits sell on a day-to-day basis, then it is your responsibility to make sure that you are in the best frame of mind and you have the best energy, you have the best ability to focus, to actually be consistent with executing your edge over both a large sample size of time and trades, right? So many people get caught up in this idea that actually the perfect strategy is simply about identifying certain criteria on the charts or a theme within the markets. And all of that is a big part of, yes, finding success. You need to have right ideas at least some point of the time, right? But your ability to actually make money from those ideas is very closely correlated to your clarity of mind, your ability to actually be able to execute on the things that you are supposed to be doing over time. And so I would argue that learning and spending time on this skill set of actually mastering emotions through awareness and regulations is going to be one of the things that has the highest return on investment for your ability to be consistent in the long run, right? I'm not talking about just looking at the charts and studying the technical aspect and figuring out how you can make your entry a little bit better. Again, it's an important aspect of what you should be doing in terms of your edge. But today we're focusing on your mental edge, right? We're focusing on your psychological edge in the market, because without that, you're not going to have the consistency or the clarity of mind to apply your strategic edge in a way that will work best for you. Okay. So the first thing that I want you guys to really be taking away from this is to keep this message in mind, to help you to understand that the problem is not really the emotion. The emotion has to be viewed as an indicator of the underlying problem. And if you never get on board with this idea, then you will never get to a stage where you can be consistent enough, because you will always be falling into a period of tilt. You will always be slipping onto a place whereby you find yourself being inconsistent in the long run. Okay. So this is what I want you guys to start changing the perspective from on a broad spectrum, right? The overall goal of what we're essentially working towards today. Okay. Now, when it comes to addressing the underlying root cause of what we are experiencing here, this can go back to a variety of different things. And this is going to be something that I want you guys to think about and explore a little bit deeper throughout this session. Now, generally speaking, I think there are a handful of reasons as to why most people struggle to really fix an emotion. You see, most people, they fall into that trap of doing what we described before. They drive their car, a warning light pops up, and their method of fixing that warning light is not to address the underlying issue. It's actually to turn off the car, it's to walk away for 10 minutes and to come back and hope and pray the next time they turn the ignition, the warning light doesn't come back on. People give the exact same advice when it comes to trading, right? You're experiencing anger or frustration. Walk away for 10 minutes, come back tomorrow, and hope and pray that when you step back up to the charts, you're going to feel differently. You're going to think differently. You're not going to act in the same way that you did. But the problem is, much like with the car, if you haven't addressed what's going on beneath the surface, that problem will always be there. It's just a matter of time before it gets triggered and resurfaces again, and you find yourself back in the same pattern of behavior. Now, more often than not, a lot of these emotions can be linked back to a variety of different root causes. Now, we can get very, very specific as to what some of these root causes are, but generally they can be categorized into a few different areas. The first one, and I think one that a lot of people tend to get wrong, is having a lack of risk management, Remember that thing that I said was basically the core purpose of your job? Managing risk on a day-to-day basis. There are many people that don't know how to effectively manage risk that helps them to optimize their edge in the long run. You see, the biggest trap that most retail traders fall into is they get to a state where they are not focused on executing their plan. They're focused on how much money they want to make. And when you're only driven by this idea of how much do I want to make in this game, then what you have to understand is you're losing track of what you actually can control, and you're focusing on something that you ultimately can't control, right? Because ultimately the reality is it doesn't matter how good your strategy is. It doesn't matter how well connected you are, or how well informed you are, or how good you can analyze what's going on politically or economically in the world. Every strategy is not going to have, any strategy is not going to have a 100% win rate. And that means at some point in time, you are going to be wrong about your idea. Now, if you're not managing risk in a way that protects the downside on those occasions where you are wrong, you are ultimately setting yourself up to fail. You're managing things in a way which, yes, you're focused on the upside, but are you really managing the downside? And there is a small section of traders, small percentage of traders that I always say fortunate enough to connect with and work with, that actually they do things the other way around. They're so concerned about the downside and they have that side on lock. They know exactly how much they are willing to risk and they don't exceed that in any way, shape, or form. But what gets them is the amount that they can make on the upside, right? I've spoken to people that are making hundreds, thousands of dollars per trade. But the problem is their mind is not ready to manage that level of capital. And if you're not ready to manage that level of capital, the moment you make it, you're going to feel one thing. You're going to feel euphoric. You're going to feel happy. You're going to feel excited. You're going to feel over the moon. And that leads to overconfidence. And that leads to making silly decisions. And that obviously leads to a worse performance over time. So risk management really goes both ways. It ensures that you're not risking so much that you can't handle a loss, but also you're not risking an amount of money whereby if you make a large win in the markets, it's also not going to put you on tilt. Risk management is about finding the right amount of money that works specifically for you. And this is the hard part about trading psychology, right? The hardest part about this game is understanding that everything in your ability to find profitability in the long run and to be consistent and to scale your performance over time, it's a you game. There is no generic black and white advice that would work the exact same for absolutely everyone, because trading is a very, very personal game, because I bring with me different experiences and beliefs to this game than you do. And understanding that dynamic exists helps you to understand that actually in the long run, in the grand scheme of what we are doing here, trading is really a game of you versus you. Until you adopt that mindset and that mentality and figure out what actually works for you and stop trying to, copy things from a textbook, you will always struggle to find that consistency unless you start taking that path. Okay, so that's the first one. I think that's quite a big one, right? It's people not managing risk in the right way, specifically either for them or for their edge. And that's a really, really important part of this game. Okay, the second side of this is the misalignment of expectations. People not really preparing their mind for what it's like to play in a probabilistic environment. And I think the best way to, or the best analogy that I can give to kind of summarize this is actually talking about the idea of flipping a coin, right? Ultimately, your edge in the market is going to be based on one of two things. If you're betting on heads is going to land, if you're betting on heads is the winning side and tails is the losing side, then you can only make money essentially by one of two events happening. Event number one is heads lands more times than tails. You have a win rate above 50%. Or you have to make sure that if your win rate is less than 50% and tails is more likely to occur, then your risk to reward on the times where heads lands has to compensate for the losses and then some, right? So your edge can only ever be one of two things. People can pull up smoke and mirrors and talk about why their strategy works or it doesn't, but ultimately your edge will exist for one of those two reasons. Sometimes both, but usually it's one of the two. And you have to decide how that is going to work, okay? But when it comes to expectations, you have to understand that in a probabilistic environment, there is randomness in the outcome of one, but probability only exists in the outcome of hundreds. And this is why, again, thinking back to the idea, the purpose of the Darwinex platform, it is all designed for long-term sustainability. This is why the risk engine works in the way that it does, because it understands that a true edge can only be seen over a large sample size of trades. If I pulled up and I showed you a winning trade or a losing trade from my previous trading record over the last week or so, it doesn't mean anything. It doesn't mean I'm a good trader. It doesn't mean I'm a bad trader, because you can't learn anything from the outcome of one. And all of this idea about accepting uncertainty and thinking in a way that aligns with probability all comes part and parcel when we talk about this idea of having the right expectations in the market. Until your expectations are aligned with the idea that anything can happen in the short term in a probabilistic environment, you are always exposing yourself at some point in time to be disappointed by an unfavorable outcome that the market has presented you with. Okay? A couple more categories I think most people fall into when it comes to blaming emotions as the problem, but really not understanding what's going on beneath the surface, right? The third one I find is generally having either a poor discipline or a poor process in order to execute your strategy, right? There are a lot of people that don't have enough clarity around what their trade plan is, what their actual edge is in the market. And without either of those two things, it's going to seem like impatience. It's going to seem like a lack of discipline. If you never fix that aspect of having clarity of what you should be doing, then you're always going to feel like you don't have the right level of discipline, or you don't have the right framework or structure in place to help keep you consistent. Okay? That's one of the hardest parts about trading that not a lot of people really talk about, right? When you are in control of making your own decisions and you have no boss and you have no clients and you have no rules and you have to make all of these things up, it makes it actually quite difficult to succeed. And it's ironic because most of us come to trading for freedom, but in order to succeed in that environment, you have to actually instill rules, right? I think that was something that was said famously by Mark Douglas, or something along those lines. I'm sure he put it a lot more poetically than I did. But it's this idea that you cannot be successful without a set of rules to govern how you approach the market. And that's very, very true. But again, it works against the belief system that most of us have, which is I'm trading for freedom. I'm trading to be my own boss. I'm trading so that I don't have to have clients or specific working hours or a fixed location in which I can do my place of business. Okay. So fixing and addressing all of those things will really help with the discipline problem. And a lot of that is clarity around the edge and then having a clear-cut process so that you can actually follow that largely on a somewhat step-by-step basis, depending on obviously how mechanical your approach actually is. Okay. The last one goes back to something that we were talking about a little bit earlier on, right? This idea of having incorrect beliefs about the market. The biggest issue I find with most retail traders in this day and age is they believe the markets are this game which at some point in time, after a certain amount of time, energy, expertise, knowledge, learning, understanding, connections, whatever it is, they believe at some point they're just going to figure it out. Everything's going to become clear. And at that point in time, I'll be able to read what the market is trying to do. I'll be able to print money basically on demand because I've worked it all out. And in reality, the markets don't really work that way, right? In reality, the markets are always going to be uncertain. And if you don't carry the correct belief system with you, then you're going to find that actually accepting this uncertainty is inherently very, very difficult. Okay. So you have to bring with you the right set of beliefs to the market in the first place. Otherwise, again, you are always opening yourself up for potential disappointment in the long run. Okay. So this is, I guess, part one of what I wanted to cover today, the broader problem. And I want you guys to start thinking differently about this. The reason most people struggle with their emotions is because they are constantly going to war in their own mind. They're constantly trying to figure out, how do I fix this? How do I stop doing this? How do I turn off this emotion? If I could simply stop feeling angry after every loss and turn that off, then I'd be a better trader. I'd be a more consistent trader. And actually, that couldn't be further from the truth. I want to share with you guys a few solutions to help you to understand that actually it's completely possible to experience all of the same emotions that everyone does, but actually train yourself to not react to them in the exact same way. And that's where your superpower comes from. It doesn't come from walking away or breath work. It comes from actually understanding why the problem exists and then fixing what's going on beneath the problem. Because when you get good at doing this, when you get good at identifying what is going on beneath the surface, the emotion, the thought, the thing that led you to experience tilt, it will disappear. It'll either disappear or it will at least loosen the chokehold that the emotion has over you, so that when you experience it, you no longer are kind of bound by this idea that you have to act on the emotion because I simply have no self-control. It can become something that you can just acknowledge, brush away, and then go about and acting on your plan in the way that you should. Okay? Now, I want to give you a very brief example of exactly what this looks like. Okay? For some people, they will say or they will feel anger or frustration when they take a loss. And when a trade is not going in their favor but hasn't yet stopped them out, they experience a high amount of anxiety. They experience a lot of stress. They have a lot of cortisol running through their body, right? And these are all things that you want to be aware of, not because you need to suppress them, but because you need to understand why do they exist in the moment. And so the question that I always ask is, if you are experiencing some kind of fear, or we'll call it negative emotion attached to the idea of potentially taking a loss, what are you really scared of? What is your fear attached to? You should first get clear on understanding exactly what that is. What are you actually scared of? Because fear is not the problem. Again, fear is a symptom of the problem. So what are you actually scared of? What's going on beneath the surface? And in this specific context, more often than not, when you unpack what's going on beneath the surface, people have one of two problems that they haven't fully addressed yet. Problem number one is they're actually scared of losing the money that's at stake. They've got, a real trade on, real position. They don't want to lose $50, $100, $1,000, $10,000, whatever amount that is attached. The actual dollar amount is irrelevant. What it means to you is very, very relevant. Okay? So some people are actually scared of actually losing the money. And then I would argue that this is a case of incorrect or improper risk management, either for you, yourself as the trader, or your edge, or maybe a little bit of both, right? But by addressing the actual attachment that you have to the money, you're going to find that you can reduce that fear. If you're no longer attached, if you're no longer feeling fearful of losing the money, then actually you can go about your business completely fine. And people that often suffer with this are the people that can trade really, really well in a demo or a backtesting environment. But the moment there is money on the line, it could be far less than what they had in their, imaginary demo account. They find that they absolutely crumble. They can't seem to handle the pressure that comes with it because they've never truly accepted the real monetary loss of what is attached to what you're doing. Okay? The second side to this is some people are fearful of taking a loss, not because of the money. They're absolutely fine with the monetary amount that's being risked, but it's the idea of being wrong. They don't like the idea that they've put in time, work, energy, they've analyzed the market, they did everything that you've been told that you are supposed to do, but ultimately they've been proved wrong. And again, it's not being wrong that's the problem. It's what being wrong actually means to you. Something that we've talked about in one of our previous sessions is this idea that most people fight the narrative of being wrong because we are all, or most of us, has been hardwired to understand that being wrong is not the key to becoming successful. Being wrong is actually going to work against me. The schooling system has taught us that actually I need to be correct if I want to be successful, because if I don't put the right answers in my exam, then I'm not going to get into this class. And if I can't get into this class, then I can't qualify with a certain grade that allows me to get into this university or this college. And if I can't attend that college, then I can't get the job of my dreams. That's the very traditional and typical path that most people are wired to follow in life. And again, it's not that it's a bad path. It's not that it's incorrect or wrong in any way, shape, or form. But the problem is when you take that mindset and you apply it to this probabilistic environment that we are playing in, you're always going to struggle to find the success that you're looking for. Now, the reason asking why, the reason asking for figuring out and digging beneath the surface to understand what is going on is because understanding which fear you are attached to directly tells you how you should be fixing the problem, right? For example, if you have an underlying fear of being wrong and somebody gives you the advice that, hey, you seem to be getting angry or frustrated every time you take a loss, maybe you should risk less money. Maybe you should, actually go down to, instead of trading one lot, you should go down to half a lot. This is the generic advice that is thrown out online. If you have a problem with being wrong, there is no amount of money that you can risk that will ever prevent how you feel in that inevitable situation. Hell, you could trade a demo account and taking a loss would still probably piss you off. Why? Because the issue is nothing to do with the money. The issue is the fact that you haven't addressed what being wrong actually means to you and what that means for your ability to succeed in the long run, right? So very, very basic example, a fear of taking a loss, but understanding what's going on beneath the surface actually helps you to understand how you go and fix the problem in the long term. And that is very, very important in the grand scheme of things. Okay. Now, as we start to sort of wind this session down, I want to move on to arguably the most important part of what you can take away from this session. After you've initially created this kind of mindset shift to begin with, I want to give you guys a little bit of a framework to help you react or change how you react to any emotion that you experience going forward. Now, from what I tend to see when it comes to most advice that's shared about, trading psychology or optimizing your performance in the markets, there are two types of advice that you can give people when it comes to reacting and dealing with emotions in trading. The more popular one is the reactive, the reactive solutions. And these are the ones whereby you've been told that, if you take a loss, you need to breathe differently, or you need to walk away, or you need to do something. It's all this advice and things that you can apply after the loss has actually happened. And again, don't get me wrong, all of those things I just mentioned, and I'm going to reiterate them in a second, they can all be very, very powerful. They can all be very, very effective. But what it doesn't change is usually the misaligned expectations or the belief system or the flawed ideology of what made you feel that emotion in the first place. And so what I want you guys to start thinking about is that instead of putting most of your focus into a reactive solution, which is dealing with the emotion after it's presented, what can you do proactively? What can you do before the fact? What can you do before you even click buy or sell? Because that's where most traders have already screwed up, right? They haven't even clicked buy or sell yet, and the mistake has already been made because they didn't address what was going on mentally, and therefore it doesn't matter what the outcome of the markets are going to be. They are always going to be annoyed with the outcome. Okay, so I want to start by actually addressing some proactive solutions. And these are all largely going to be mindset based shifts and understanding largely what's going on beneath the surface. Okay, so the first one that I want you guys to start thinking about, and again, this happens long before you actually hit buy or sell, long before you analyze anything or try and pick out a position. I want you to think about the last potentially negative, and again, I use this in quotations, the last negative emotion that you experienced, right? What was the last emotion that you experienced? Now, I want you to stop and ask yourself, forget the fact that you want to turn it off, you don't want to experience it anymore. Forget all that for a second. I want you to ask yourself, why does the emotion exist? Why do you actually feel it? If you're someone that feels anger after a loss and it causes you to revenge trade, again, the problem is not the revenge trading. The problem is not the anger. The problem is why you're feeling that anger. And it can go back to the examples that we talked about before. You're scared of losing money. You're scared of being wrong. What's going on beneath the surface there? Maybe you have a problem with overtrading and you put this down to, I'm just impatient. I can't seem to, keep my cool and not hit the button whenever I step up to the charts every day. Is it impatience? Is it really? Think about it for a second. Why are you experiencing an urge to get into the market? Because when you can truly address that, then the underlying problem will fix itself. And usually one of the most common, and I call this often a silent performance killer, one of the reasons that most of us tend to overtrade, it's not because you lack discipline, it's not because you lack patience, it's because you're bored. It's because you're looking for probably something quite specific in the market, a specific type of setup. And you start to realize that actually it doesn't happen every day or every hour or maybe even every week like I would like. But in that meantime, you haven't created a plan for how to address that boredom. And when the boredom creeps in, you don't address it, you don't acknowledge it, and the boredom gets bigger and stronger and more powerful. And the only time you recognize it is when your mind is on overdrive and it is trying to create some excitement. It's trying to create a thrill. And how does that transpire in the markets? Well, often it's with us trying to create an opportunity which simply does not exist. Okay? So you have to stop by asking yourself what is going on beneath the surface. And if that's something that you're struggling with, I want you to focus on one word and one word only. Why? Why am I experiencing this emotion, right? You could take this from a very, very generic base level and you could turn this into something very, very specific. Let's go back to the analogy that we were talking about how you manage a losing trade. I am unsuccessful as a trader because I give more money back on my losses than I make on my winners. Why? Well, taking losses annoys me. Therefore, I tend to take revenge on the market and I try and beat my money back out of the market. Okay, why do taking losses frustrate you? Well, because I don't want to lose money. Why? Well, if I lose that money, then it's money that I could have put into X, Y, and Z. And without making it back, I'm not going to be able to, pay my bill this month or go out for the takeaway that I'd like or save up for the holiday that I really want to go on, whatever it is, right? It goes back to the idea that you are attached to money, and you can break it down layer by layer simply by asking yourself, why does it exist? The moment you peel it back layer by layer, and it can often take 4 or 5 times to ask yourself the question and really reflect on what's going on beneath the surface. But the moment you understand it, then actually now you have true clarity of the problem. The moment you understand what the problem is, this is a huge win, because now you can actually address the underlying problem. And the moment you learn to do that, you will find that actually you're far more likely to fix that problem, or at least, again, loosen the grip, the chokehold that is causing or driving that emotion going forward. And that's what's really going to help you in the long run. Okay, so tip number 1, your first proactive solution is the thing that we've been talking about since basically the beginning of this session. Sit down and take some time to understand, why are you actually experiencing the emotion? When you uncover the real driver, then actually finding the solution becomes far more efficient going forward. Okay. The second side to this is, from a proactive basis, you can tell your mind a certain story to align it with the probabilistic nature of the markets. And for me, this is all about shifting your perception in the right way so that you are thinking in a way that allows you to thrive in the long run. Now, the best way to help you guys to understand exactly how to do this is I want to share a short parable, right? This is called, at least how I heard it, it was called the Chinese farmer and the horse, okay? I'm going to read it out to you. It's going to take me nothing more than 90 seconds to probably get through it. And then I want to talk about the moral of this story and how it can change your perception of basically everything that happens going forward. This is not just to do with trading. This is about life, because it can be applied to absolutely everything. Okay. Once upon a time, there was a Chinese farmer whose horse ran away. That evening, all his neighbors came around to commiserate, and they said, "We're so sorry to hear your horse has run away. It's really, really unfortunate." And the farmer turned around and he said, "Maybe." Now, the next day, the horse came back and it brought with it 7 wild horses. And in the evening, everybody came back and they said, "God, isn't that lucky? What a great turn of events. You now have 8 horses instead of the 1. And the farmer turned around and he says, "Maybe." Now, the following day, the farmer's son tries to break in one of the wild horses. And whilst riding it, he was thrown from the horse and he broke his leg. The neighbors came around that evening and they said, "Oh dear, that's too bad." And the farmer, in his usual manner, turned around and said, "Maybe." The next day, conscription officers came around to conscript people into the army, and they rejected the farmer's son because he had a broken leg and didn't feel he would be fit for service. And again, that evening, much in the way that they have, the neighbors came around and they said, "Isn't that great news?" And again, the farmer turned around and said, "Maybe." Okay. Now, the moral of this story is to help you guys to understand that it is impossible to tell whether anything that happens, whether it's in trading, life, relationships, business, job, whatever, it's impossible to tell whether anything that happens is good or bad, because good or bad is subjective when it comes to the aspect of time, because you never really know what is going to be the consequence of misfortune, and you never really know what is going to be the consequence of good fortune. What feels good today could be the worst thing that ever happened to you tomorrow. What is bad today could be the best thing that ever happened to you tomorrow, and it all depends on your perspective. So what I would argue is that if something has not gone your way today, right? If something has been amiss, if something hasn't really worked out in the way that you had planned, and you're sitting there kicking yourself asking, why has this happened to me? I would get you to stop, forward pace, and ask yourself, how could this particular situation be lucky for me in the future, right? How could this moment in time be a moment which unlocks so many doors for me, which gets me to eventually where I need to be? Because that's the reality of this game that we play. You taken a loss today, maybe that loss is going to put you onto a train of thought which gets you to fine-tune that final piece that you need to make your edge really work in the market. Maybe you've gone through a long enough period of drawdown that it's finally broken you down to help you to understand and to build the resilience that you need, that you can finally be successful in the long run, right? You hit that breaking point, that low moment, but it wasn't until you get to that place till you have the strength internally to deal with everything that happens externally. Okay. So in your mind, there is always a different perspective. There's always a different narrative that you can tell yourself. And again, this doesn't have to be limited to just trading, but that can help you to understand that just because something is this way today, it doesn't necessarily mean it's going to be that way tomorrow. Again, the best things that could feel amazing today could be absolutely terrible tomorrow. The worst things that could be happening to you today, next week, you might look back and be like, I'm so glad that happened. That was the best day of my life, because you have a different perspective. And if you can learn to unlock that future perspective today, it changes how you act in the moment. And that's, again, one of the superpowers that I want you guys to be able to develop. But it doesn't come from how you react in that situation. It comes from laying the right foundation from the very get-go about how a situation is perceived to you. Understanding that it is always a choice puts you in a place of power, because now you can always be in control of how you respond in a certain situation. Okay? The last perspective shift that I want you to take on board is I want you to understand, what do you truly expect when you get into a trade, right? When you open a position, what are you expecting to happen? Because some people sit on either end of this fence. Some people have been so conditioned to taking losses over time because they haven't found the success that they're looking for. They immediately think, I'm going to take a loss. And they're so pessimistic, and they don't give themselves any confidence behind holding positions long enough to actually see them turn into the fruit that they are looking for, right? Some people go the other way. Some people are only planned for a winning trade. They would not be in the market if they weren't expecting to make money. But when the inevitable loss happens, they absolutely crumble because they weren't expecting it. So the thing that I tell most people about your expectations about the market is you should only ever really expect one of three things, right? Outcome number one is you're going to have a small losing trade. Outcome number two is you're going to have a small winning trade. And outcome number three is you're going to have a large winning trade, right? Small loss, small win, or big win. If you can align your mind to prepare and fully accept any one of those outcomes, how could the market ever disappoint you? How is it possible? The truth is, it's not. If your mind is truly aligned with the expectations that the market brings, you will start to understand that it is impossible for the market to disappoint you, because all your expectations have aligned with what the market has presented. Okay, so think about that for a second. If you're ever frustrated from an outcome in the market, that can only be possible if, one, your expectations actually weren't truly aligned and you didn't expect one of those three outcomes, or number two, you took the one thing that I actually left out of the equation. You took a big loss, a loss that you truly weren't comfortable with, whether it's in dollars, a percentage amount, whatever it is. You lost an amount that wasn't really suited for you as a person. And that's going to be something that always holds you back. Okay. So a few different things there I want you to focus on from a proactive perspective. Getting beneath the surface, understanding what is the driver behind the thought process. The second side is being able to change your perception, right? Understanding that what is good today could be bad tomorrow and vice versa. And the final side to this is actually making sure that you've aligned your expectations before you even hit buy or sell, because that's going to have a big influence on what happens for you in the long run. Okay. So 3 really powerful things that if you spend a little bit of time on, it's going to help to, again, either completely eliminate the emotion whatsoever, or it's at least going to reduce the chokehold of the emotion that it normally has on you, that you're able to start doing something differently. Okay. Now that we've covered the proactive side, and again, I think this is the side that is neglected probably the most, I think it makes sense to talk a little bit about the reactive stuff. Now, this is the stuff that it's a lot more commonly spoken about online. These are going to be things that maybe you've heard a little bit before. But when you couple the both of these together, that's where you truly see the magic. You see, you could do all the proactive stuff in the world, but again, we are imperfect as human beings. And therefore, expecting that just because we've done all the groundwork and foundation early on, nothing can ever go wrong is probably irrational. It's probably not a very logical way to approach a probabilistic environment. And so my recommendation is that you need a little bit of both. You need to lay the right foundations in terms of your mindset, in terms of digging beneath the surface, and that all happens proactively. But then you need to couple that up and be ready for a plan of action to how you're going to respond when and if an emotion still does creep up. Because the proactive stuff can honestly, if you do enough groundwork, it can fix 60, 70, maybe even 80% of what you're experiencing right now. But you combine that with a reactive approach as well, and you're going to find that 9 times out of 10, you can do the right thing. I'm not going to suggest I'm going to make you a perfect human being, because I don't truly believe that they exist. But 9 times out of 10, 8 times out of 10, that's enough to probably still allow your edge to survive whilst making human errors, mistakes, missed opportunities. These are all part and parcel of the game, but you can learn to thrive in this probabilistic environment despite all of those things. Okay. So some of my favorite reactive solutions. The first one, I would argue, could be tied in with a little bit of a proactive one because it can help you on both sides of things, but it's making sure that you're keeping a good journal. This is the heart and soul of everything that goes into your performance in the markets. And again, the rationale, something that I've probably shared with you guys many times, this idea about how you deal with these moments and how you get ahead psychologically in the long run is all based around the idea of how good is the quality of your journal. Because the reality is the human mind is flawed. It's limited. It's skewed by a variety of different things psychologically, some which most of us have no conscious control over, but you can learn to become aware of them, and you can learn to change how you respond in those particular environments, right? So I would argue that by not keeping a good journal, you're doing yourself a disservice. A disservice because our memory is limited to a period of time. You might be able to tell me what you had for lunch yesterday without giving it a second thought. But could you tell me what you had for lunch last week or last month or 6 months ago or 2 years ago on today's exact date? Probably not. But if you were keeping a journal, you probably could, and you could be accurate with that. What's not being measured cannot be improved. And so your journal should be the one place that you actually start to document everything that you're experiencing. So in the context of what we're talking about today, we're talking about thoughts, we're talking about emotions, we're talking about things that cause a detriment to your performance, but all of which are rooting internally. Write them down, right? Write them down. When do they occur? Is it a particular time of day? Is it after a certain outcome in the markets? Do I always feel this way after I've just had an argument with my spouse? There could be a variety of different triggers, but without actually mapping out all of these different things about how the emotion actually came to present itself, you're never really going to understand the pattern of behavior that you go through that led you to that place. The moment you can start keeping a journal and recognizing that I'm experiencing this kind of thought, which produces this type of emotion, and this actually has happened very, very often, and these are the similarities between all these times it's happening, it's going to allow you to do 2 things by keeping a good journal. The first one is you're going to start being able to detach from what you're experiencing in the moment, because it doesn't feel so personal when you realize it's actually a pattern of behavior, right? The moment you can develop that level of detachment, it starts to set you free, even just slightly, incrementally. But that crack in what you've been experiencing is enough to open a door to start doing something differently, right? When you start getting very, very clear on what is triggering most of your emotions, then you can start developing a game plan, a thought process. You can start understanding that, hey, I've been journaling now for the last 3 months, and it seems like every time I take a big loss, it usually comes off the back of taking 2 or 3 smaller losses in a row and managing risk correctly, but then suddenly blowing up. What is it about after losing 2 or 3 trades in a row that I am not liking? It's not sitting well with me. And you can start to dig into that. But you can only connect those dots if you have a good quality journal. Okay, so if you're not already doing so, make sure you have one, and make sure you're documenting more so than just the trades that you're taking. You need to be documenting the idea, the thoughts, the emotions that you're experiencing that goes into support the decision making behind those trades. The moment you start doing that, you will discover the magic that journaling can bring for you, and it will really, really change your approach in the long run. Okay. The second side of things, it's a breathwork technique, right? This is one that I really, really recommend to most people. Maybe I will try and tie this into a future session to give you guys a live demonstration of exactly what this is like. But for now, I want to leave you with the name and something that you can Google and find an easy guided demonstration. It's a very, very simple breathwork technique, and it's called box breathing, right? BOX breathing. The idea of box breathing is a 4-step process. It goes in and creates like a box. You inhale for the count of 4 seconds. You then hold your breath for the count of 4 seconds. You then exhale for the count of 4 seconds. And then you hold on the exhale for 4 seconds. And you repeat that process, right? So that's one round of box breathing. Inhale, hold, exhale, hold. Inhale, hold, exhale, hold. You do this, you keep your count mentally, and what you find is that your body and mind will come back into alignment. It is an effective and a proven way to help get you back into the present moment and to help you lower that level of stress and bring you back to a place of calmness, mindfulness, presence, to help you to do the things that you are supposed to do going forward. So if you've got a few minutes right off the back of this session, jump onto something like YouTube, type in box breathing, guided box breathing, and you will find very short, quick examples of exactly what this looks like. 2-3 minutes, and you can completely transform and reset your mindset so you are ready to follow your plan for the next trade. Okay. The third tip that I want to give you from a reactive perspective, from a reactive solution, is also changing your perspective, right? We talked about this a lot with the story of the Chinese farmer and the horse, right? What can you start doing in the moment to help flip that perspective if your emotions are starting to act up? Well, I normally suggest to most people, if you're feeling, let's say, again, we'll go back to our analogy that we focused on today. Let's say you focused on you're feeling angry after a loss. Ask yourself one simple question. How could this be worse? How could this be worse? Because the reality is, it could always be worse. You might have taken a loss today. You might have lost 0.5%, 2%, $500, $10,000, whatever it is. You could have lost anything today, but it could always be worse. Because if you kept your account, if your account's not at zero, if you still have the lights on, if you still have connection to the internet, if you still have an ability to earn money, you can reset and you can start again, right? The situation can always be made worse in your mind. And the moment you flip your perspective to start thinking that way, it actually opens the door for you to start being grateful for the fact that it wasn't actually far worse. And that's something that you want to be very, very mindful of. Okay. So changing your perspective is very, very powerful. Much like we've done proactively, can also be done reactively. One other quick way that you can do this is in the moment, and you can keep these written on Post-it notes, pinned to your screen, on the background of your phone, whatever it is. Ask yourself, how would a professional trader, someone that you look up to and aspire, how would they manage this specific situation? Because I can promise you, they all take losses. They all go through periods of drawdown. They all mess up. They all miss opportunities. How would they deal with this moment? They're going to go on revenge trade? Are they going to overtrade? Are they going to go on tilt? Probably not. they're probably going to do exactly what their plan tells them to do and step away for a period of time to just allow themselves to cool off, right? So 2 quick ways to change your perspective there. How could this be worse? And how would a professional trader react in this specific situation? The last one I kind of teased in that, that last answer there. Give yourself some time to actually have a breakaway from the markets, right? It's very, very easy for us to be overwhelmed and consumed by everything that's happening in the moment when we are experiencing it. But the one thing that has always been proven true is that our mind tends to have 2 modes of operation, right? There was a very famous psychologist called Daniel Kahneman, wrote an amazing book called Thinking Fast and Slow. And inside that book, he talked about these mental modes of operation that we have called System 1 and System 2. System 1 is the impulsive, emotional, and reactive side of our mind. And System 2 is the opposite. It's the slow, it's the deliberate, it's the conscious, it's the logical part of our mind. We all have both of these things, but what often separates System 1 and System 2 is a little bit of time and perspective. And this is why a breakaway can always do you some good, right? I always have this philosophy that I share, and I'm going to share it here with you today because I think it'll be beneficial. I follow this idea that time will always fix your frustration, but it will never fix your account balance. And that's why it's important to manage risk and walk away in the moments where you're not really feeling it, right? Time will always fix your frustration, but it will never fix your account balance. Walk away. Give yourself some space. Give yourself a fresh perspective and come back when you really feel like you're ready. Because if you make a mistake and you cost yourself some money, there's no amount of time away that's going to take that back. The frustration will disappear. It might take a day, it might take a week, it might take a month, but your account balance will be exactly how you left it. Okay, so it is always a choice and one that you have to make every single day. Okay, that is my framework to help you guys to better manage your emotions. I want to say a massive thank you to the team at Darwinex for having me again today. I hope you all found today's session very, very valuable. Again, it is available for you guys to watch back at any point in time. So if you missed anything, if you need to catch up, if you joined late, if you want to go back and take some notes, please feel free to do so. Otherwise, I will leave you all to enjoy the remainder of your day. Hope you enjoyed today's session, and I will speak to you again very, very soon. Thank you guys so much. Take care.